This is Katherine Hill Ritchie, and you're listening to the Matt Balaker podcast.
Good day. Thank you once again for tuning into the Matt Balaker podcast. And I know over the last couple of years, we've been out of touch with some people. So this is a wonderful opportunity to reach out with someone you maybe went to high school with and you haven't spoke to in a while and say, hi, you should subscribe to the Matt Balaker podcast. It's a way to, reintroduce ourselves to old friends and acquaintances. So please do that. I would sincerely appreciate it. Well, today's guest is likely the most gracious human I've ever met in alternative investments. She talked with me years ago at hedge fund conferences when I was a doe-eyed newbie. She's worked with multiple billionaires. She's launched her own consulting firm. She's a frequent speaker at family office conferences and is a proud Maryland resident. Join me in welcoming Katherine Hill Ritchie. How are you doing, Katherine?
Great. Nice to be here.
Well, nice to have you. And I know from our stealth research team, you were the president of the Physical Therapy Association in college.
Oh my gosh.
Did you plan on working in PT?
I did. And it's funny because I always had leadership positions. And I think even in elementary school, I think people are like, oh, you should run for that. And I'd be like, okay. So I did think about having that as a career. But then I really got into investing. And so that became more exciting to me, even though I did, work with patients and
wait, so you're saying it's more, investing is more exciting than helping people with like carpal tunnel syndrome or frozen shoulders? Like, how can that be, Katherine?
It's funny that you mentioned that because my grandmother even said to me, wait, you were helping people and now you just make rich people richer. And I was like,
I also push paper around, Grandma. So
exactly. But I invest in things that also can make the world a better place. So,
amen. It often takes money from rich people to create cool products that
there you go.
People like I can benefit from. So where did you grow up, Katherine?
Well, I grew up in Maryland, so I was born in New York City, but then I grew up here. And so I've kind of made a full circle back from living in New York City, living in Switzerland. And it's nice to be back and use the skill set that I use investing all over the world to now be able to sit back in my home state and do it from here.
So you've gone back, wonderful seafood, and now it's a hub of lots. I think you mentioned it's the first or second state, highest ranked state in terms of biotech investing.
So we are really aggressive in this state, which is great. It's just forward thinking governors way before my time who thought, let's actually invest. And you've got Johns Hopkins and NIH here and a lot of those kind of facilities, national labs. So it makes
you have the Wire, the Baltimore Ravens. So you have lots of stuff to draw from.
Yeah, exactly.
So you mentioned Switzerland, and I know that was very important for you for many reasons. Can you share with us how you got to Switzerland? And please don't say plane, but what motivated you to move there, and what happened when you got there?
So I already had a great job. I was in New York City, and I was very proud of myself. I had a great job with a family office who wanted me to stay in, they hired me because I was in New York and to open up an office. And then in the course of that, when I really got into the family office world, then I met another family office, another one. And I ended up going to dinner at it was a hedge fund investment dinner. And I sat next to someone who is the chief investment officer for a family office in Switzerland. And we got to know each other. And basically then, I was offered a job and I was like, wow, I never thought I'd leave New York because, when you
if you're a New Yorker, that is the world, right? I mean, exactly. Educate me, please. And,
you kind of like drink the Kool-Aid. I got my MBA in New York. I'm never leaving because to you, that's the center of the universe in investing. So that was a fun just thing that happened in my life. And I thought, oh my gosh, this is fantastic. I would love to do that. What an experience, right? Mm-hmm. And also, I got to tell you, in New York City, obviously, super competitive, right? How many people want to work in finance? A lot.
Right.
Well, this was a way to actually advance my career by leaving, right? Because if I'd stayed there, there are thousands of other MBAs in New York, and this was an interesting way, career-wise, to advance my career. But I left, but also it was a fantastic opportunity. So
yeah. So what's it like living in Switzerland?
well, it was great. I'd been I had traveled when I was younger, but living abroad is very different from traveling. So it was a bit of an adjustment. Very expensive place, and also just different culture. I remember I went to a networking event, and here I was, fresh from New York,
Mm-hmm.
and I thought, oh, I'm going to get to know this town. And there were people looking at me like I was an alien. People didn't have business cards, and they were very used to proper introductions, even in the business world. When I'm used to being at New York, you learn you're at a cocktail party for work, you're going to walk up to a stranger, introduce yourself. So that was a bit of a culture shock because I was used to that kind of networking, and that's just not how it was in Switzerland. So you have to know people, you have to join organizations, and slowly you get integrated.
It
But
sounds more deliberate almost.
it is, but at the same time, it's like even outside of the work environment, I went over there as a single person, and it's just funny because it's like, well, my family hasn't known your family for 200 years, so I'm not sure we can be friends, or I'm not sure we can even go on a date, and that was hilarious because we just don't think about things like that in the U.S.
Yeah, what's it like meeting people, like socially in Switzerland?
Well, they're a little bit more standoffish. I think it's also because they don't know how long you're going to stay. So maybe they want to.
Is it worth my time to talk
exactly.
to you?
Exactly. But it was a fantastic experience. And the amount of money that ends up running through Switzerland, I've heard it's up to 1/3 of the world's capital, which I wouldn't be surprised.
Well, that's what it takes to buy lift tickets there. So it's no surprise.
Exactly. But yes, the lifestyle there, I mean, I lived in Geneva, so the lake and skiing and everything, that was great. But career-wise, it was a really good decision.
So it's great career-wise. Did you know how to ski before you lived in Switzerland?
Yes. Okay. Not well, but I did it anyway. And that was a great way to socialize as well, because everybody in the weekends goes to the mountains. So it was like, and especially, the London hedge fund scene would come to Switzerland for the weekends, and they'd all be at Verbier. And Verbier is one of the ski, locations, but it was very sporty and really predominantly English speaking, even though it's a Swiss, city. Well, ski place, but everybody would be there, so you could almost do business there. It was hilarious.
That sounds a lot more fun than golf courses. So maybe the U.S. can adopt some of these practices. So what motivated you to move back to the States?
I think it was there's a point where the longer you stay, the harder it is. Now, luckily, I had always kept my networks up. I was really involved with hedge fund organizations, women in finance, and also because I was starting to get outside of hedge funds. I was starting to do direct investments for the family office I work with. So therefore, I always wanted to have good deal flow globally. So I luckily kept my network up. So it became kind of obvious that, if I stay here, I'm going to be here forever. And I, knew that with family and things like that I, wanted to come back to the US eventually. So it was another great opportunity. I got another offer from a family office that wanted to actually launch an early stage startup. They wanted someone to run it. So that was really my ticket back.
So I'm not surprised you get all these offers. You're really intelligent. You're well connected, but for people out there who are less familiar, and by other people I mean me, with the family office space, it's not like you go to Indeed.com and it says job offer, like submit your resume. How do you get these offers?
It's funny. There are more and more. So now if you actually looked at Indeed or maybe LinkedIn or something, there are jobs for family offices, but 5 years ago, there weren't, or even 10, or people didn't even know what a family office is. Now more people know what it is, and they're calling themselves a family office, and they'll say we are, because otherwise sometimes they might put job postings, but they're a little bit misleading, because let's say a private equity fund, a proper fund, and then a family office that runs like a private equity fund, or runs like a fund of funds, or runs like a venture. It's not the same, because maybe you can't always earn carry, or you're never going to be a partner unless you marry into the family. So
it's more of a monarchy situation.
Yeah. But really, more and more there are jobs. But I think you do have to get within the networks, and that's either by knowing a family, going to conferences, being connected in that sphere. But it's not that easy to break in. And I just happened to luck out. In business school, nobody ever taught me what a family office was, right?
Yeah, so we're going to overtake business schools right now, you and me, Katherine. What is a family office?
Great question. So there are some schools like Harvard and Stanford that actually have little programs around them, but really it is a unit. You could consider it almost a business unit, really just functioning for the purpose of a family and their investment assets. And there may be concierge services around that.
Okay.
I never did that. I only did investments, but some people have all of it kind of under an umbrella. So it could be an LLC, it could be in a trust. It really doesn't matter what the back end structure is, because a lot of times the concierge type services would fall under a different entity than maybe the investment people. But we could all be in one building per se, or whatever. But really, it's someone who is a very wealthy family, usually over 100 million and up. It makes sense to have dedicated employees. Under that, there are still family offices. I know they're under 100 million, and they are very active. But then I know billionaires that have like 3 people, and they're not very active.
Right.
I mean, there's no right or wrong way to do it. There's also tax implications. For example, look at foundations. You could make your family office into a foundation, and then there are rules around that. Obviously, there's tax breaks around that, but then there's obligations and things you have to do reporting wise, and so much you have to invest per year. But really, a family office is just it's employees hired to take care of your wealth.
So it's a little bit different than HBO's Succession, because I think that's where people would kind of get the idea. But so no, very, very helpful. And I think you and I initially connected. I don't know if it was initially, but hedgefund.net was a big database in the early 2000s, and that was kind of when I was getting my feet wet in the industry. But this was such a cool. It seemed like really ahead of its time. Such a cool idea, because it was this aggregator of different funds across multiple strategies. And I remember working with Napoleon Buttigieg. If you're listening, Napoleon, hope you're fantastic. What was your involvement with hedgefund.net?
Well, it was my first real job out of business school. And I thought it was great, because I came into business school in the early 2000s, where it was right after the internet bubble. And what I thought was awesome was using the internet for financial services, but also for marketing. So they're 2 different industries in a way, but you can do financial services marketing online, which wasn't the case before. So you could log on anywhere from the world and get hedge fund data. That didn't exist previous to that. And what was great about that is we'd have a family office from Buenos Aires who might learn about a hedge fund in London and invest. And we were the connectivity. We had to do due diligence on the fund managers, make sure they were real. Back then, it's funny, now everyone's moved to Miami. Back in the day, if there was a hedge fund that was in Florida, we were like, oh, it's got to be a fraud. So back then,
everything was domiciled in Bermuda, the Cayman Islands.
Exactly. We're like, yeah, no way. It's funny now, right? So many of them are moving down. But hedgefund.net was a great experience for me, because I learned the database aspect of it, but we did have to do number crunching, calculations, all of that. Try to help the fund managers get more investors, and kind of play that connective piece, and help them with their marketing and their messaging. And that was, we were doing interviews back then. I mean, it was
very thorough. The analytics were intense, because I remember being asked these questions. I was like, all right, I got to figure all this stuff out. But it was a lot more than just you put your name on and then people will contact you. Like,
absolutely.
What was the business model? Like how did hedgefund.net make money?
Well, it's actually been acquired now by private equity firms. So it was
Okay.
really, and there were a few other competitors that came after them, but really one is just an access fee. It's just like a subscription
Mhm.
to the database. So you can log
Okay.
on and then the information on the funds would be updated. There was also a newsletter just on hedge funds, a publication, and then another one we had in private equity. Then we did a private equity database too. And then there was a broker dealer associated that actually did specific fundraisers for some of the funds. So
Okay.
there were several business models, in fact, to to make the company what it was.
So
And
it's like a match.com for companies and investors.
it was way back then. Now there's so much of that, right? But
Uh-huh.
at the time, it was pretty unique. And it was a great experience right out of business school because it was a new area and it was just very exciting to be a part of.
Well, thank you for being a part of it. So you're worked in family offices. You did a great job of defining what that is for us. But we want to move up in our business school rankings, Catherine. What is a hedge fund?
Oh, great. Interesting question. So hedge funds are actually it's an investment entity. They can do a variety of things. There's not one way. It's not like a
Mhm.
mutual fund where I mean, of course, you're looking to buy low, sell high, right? It's one
Yeah.
directional, and that is very different from. And mutual funds are accessible by anyone. You can log
Mhm.
on and invest in them. Hedge funds are usually only for accredited investors, and they can have a variety of strategies, some of them quite complex, some of them actually quite simple. So we call like a mutual fund long only because they're only
Mhm.
looking to go long when hedge funds originally came from shorting. So yes, there are strategies that short, that there are strategies also that do a variety of things. I mean, there's merger arbitrage, you're going long one, short the other. There's also all kinds of we had 30 some strategies. So a hedge fund is really just a vehicle, but your investment materials, when you open up the a fund to outside investors, you have subscription documents and
Mhm.
offering memorandums, and it will say in there exactly what you're going to do. And you have to stick to those rules. You're not supposed to have style drift, and all of a sudden, just because there's a new opportunity,
No,
like
style drift is frowned upon. Stick to your
exactly, like
knitting.
if you were just doing TMT stocks or just healthcare stocks, all of a sudden crypto comes along and you put 90% in crypto, like no, you're not allowed to do that. Some of them have like maybe up to
They have a
10%.
10% wiggle room.
Maybe you can go outside, but really you're not supposed to. So really, a hedge fund isn't just one thing. It's just kind of like the name for all of those strategies they just put under the hood of a hedge fund. But a lot of times they are public. You can do privates, but a lot of times they do public. More often it's public stocks.
Mhm.
Although there are some that do privates, but it's a lot more do publics.
Yeah, that was a wow A+ answer. You get extra credit.
Well,
I
well,
was
I had to explain it to my grandmother again. And when you think about that and you're like, okay, I can explain this in like real terms, not
yeah.
terms that are intimidating or, you know, I want people to understand. So,
Hmm. Well, I remember when I was much younger and much less married. If I was going out on a date, that was always like a question, like, what is a hedge fund? And I got to the point where I'd say it's a investment vehicle that's a lot more restrictive on who can invest and a lot less restrictive on what you can invest in.
that's a
And
great
then
explanation
then
too.
usually go, oh, and
Yeah, exactly.
leave me for some actor or something. But that was I think the simplest way. But I liked your summary even better. So you're in the hedge fund world. You talk about multiple strategies. You mentioned compared to mutual funds, they don't have to be long only. They can you mentioned convertible or merger arbitrage. I remember it might have been from talking with you or Napoleon. There was a hedge fund in New York that invested in taxi medallions, and I thought this was pre-Uber, and at the time it made a lot of sense because it wasn't highly correlated to like what the Nasdaq was doing. What are some of the more unusual or out there strategies that you've come across?
Oh my gosh. I've seen so much. I would say back in the day, well, the now there's more of them, but I remember back in the day one was around lawsuits. So it was, investing in lawsuits. And that I thought was incredible. And then also around insurance contracts. Oh, I forget the name of it off the top of my head, but it was kind of morbid at first. It was where you would
viaticals. I think
yes, exactly.
Okay. That's freaky. I know that. So go ahead. Yeah.
Yes, and I remember when it first came about, it was because there were, sadly, AIDS patients who had life insurance policies and they were going to die, and they sold the life insurance policies early, obviously, to an investor. I mean, it was like, wow. So, and then weather derivatives.
What are weather like? It's going to rain tomorrow. Do you want to bet on it?
Yeah, exactly. I mean, there's catastrophe bonds, cat bonds, but this was even more. It was also around like insurance and things like that. But derivatives gets very complicated because you are not actually investing in the stock, right? You are investing in the movement, right? Yeah. And so you don't have to pay as much because you're just paying for the option on whichever way you think that's going to go, up or down. I mean, really complicated stuff. But it was fascinating because I learned so much that I never would have learned at business school, because this was my schooling. So, and I got to talk to managers all over the world. I mean, I met really famous ones. I've met Dan Ock. I've met Carl Icahn. I could name, I don't want to name drop because none of them are going to remember me. But I was just like, wow. For me, it was very cool. And I learned about every industry, and it was just a very interesting and exciting and never a dull moment.
No, there's never a dull moment. And when you talk about every industry, like, you really mean that. Like, I'm looking through some of the stuff you've worked on. You mentioned derivatives, but also consumer products. I remember talking with you about, I think it was toothpaste, biotech. I mean, you have these highly disparate industries, and your job, Katherine, is to kind of analyze these investments. Like, how do you do that? Like, how do you compare toothpaste versus, the next great biotech deal?
Well, that's a great question. In my job today, I mean, after like 20 years experience, I've learned one or two things, but I don't have a PhD in biotech, and it's really hard. So, for example, even actually just before this, I was at an investment committee meeting, and we're looking at two biotech firms. They do very different things. But what I want to know is, my mom and dad are PhDs, and I know a little bit, but I cannot opine that way. But what I want to know is, what, in the most simplest way, what does it do?
Right.
And what is it based off of? And, the Nobel Prize in, I think, 2006 was on stem cells. And so there's a lot of biotech stem cells. So it's like, okay, what are they actually looking to do, and how's it practical? Is it a pill? Is it an injection? What does it do? And so that then kind of brings it down to earth, because I don't understand the mechanisms behind why stem cells do what they do, because that's way above me. But I can say, okay, have they met their milestones? What are they trying to accomplish? And then I can look at comps and say, okay, what did another biotech firm at this stage do? Who are the other investors? Things like that. So no, I can't, I will never start, a biotech company myself, but I know enough that I can contribute to the conversation, but I do ask for a lot of help. And we have fantastic PhDs that I can go speak to and ask about. And so, Johns Hopkins and NIH nearby, so I can pull those resources in when I need to.
So you just called Johns Hopkins, right? There's a person with that name.
There's a Katherine hotline at Johns Hopkins. They're like, oh, it's her. What do you need, Katherine?
I knew you were important, but that's a whole new level. Wow. Congrats. So are there any industries that you've purposely avoided, or you're just like, that's too wonky, I'm not going to bother trying to dive into this?
Well, it also depends who you work for and what your stated purpose is. In some jobs for family offices, I had very narrow focus. I was to do X. And then others, I had really a wide range. So it depends. I mean, I'll say, for example, there are some people that refuse to invest in biotech, and I can understand why they do it. Where I am now, what I'm doing today, we invest in biotech. So I had to just, get educated on it enough. I'm going to learn something new every day. But, then you've got things like I mentioned before, like crypto, for example. Well, here's the thing. Crypto is a new industry, but if you look at the backbone, which, we're talking about not individual coins, but look at the whole payment system. That's how I looked at it. And I living in Switzerland, I had to transfer money back and forth because I had a mortgage on a New York City apartment, right? And I mean, wiring money to yourself from your own account and then to your own account, and then you get charged for it. That's where originally I was interested in the backbone and mechanisms of, global payments and these kind of, Ethereum and there's a lot that can be done in that space, but there are bad actors that came in, and also people who always are looking for a get rich quick scheme. So so some things really did turn me off, and there were pump and dump basically in a lot of ways in some of the coins, and that's terrible, because then what happens is the whole industry gets grouped together when there are great possibilities with everything in and around crypto. But it's just whenever you have a new industry, there's going to be bumps along the way. And we had our first bump, which was, the crypto winter, which we're still going through, right? But just like look at the early tech stocks in the late 90s, we had the internet bubble. Does that mean that nobody went back and is using the internet? So that's, I guess, kind of the way I look at it. But if you're a billionaire, maybe you could put a little bit money towards these new areas because you might have the capital to risk, but then you can also reap the rewards if you were an early investor, and a first mover advantage. But I just think that it's not fair to slam a whole industry when there are some good parts of it. But in general, I guess there's no areas I really avoid. I just need to learn more. Like space is fantastic to invest in. And we have one or two companies that we've been looking at. And I know a friend who just started in a space fund, literally.
A space fund. We sell space. Yeah.
Originally somebody joked, they said, "Oh, you mean like real estate, like a space,
right.
investing in space, like land?" And he's like, "No, like space." But
it's like bottled water, but it's just the bottle.
Exactly. I don't know enough yet about that, but I do think, look at satellites and there's so much that could be a part of that thematically, but I am no expert.
Okay. So whether it's crypto or space, Katherine, or art, the due diligence process has to have some commonalities. What are the few items when you're reviewing an investment that are most important to you?
Well, first of all, no matter how amazing a technology is, if you have people who are corrupt or not really good at business, it's not going to fly. I've seen amazing ideas and really great technology sit on a shelf and go nowhere because either they're not prepared, they are tinkerers. There are people who like to tinker in a lab or tinker around with things, but they aren't focused solely on commercialization or business operations. And that's where everything can be a disaster. So that's really important. and making sure the people really understand where they're going and want to get there. Because I have seen some real disappointments where things just never took off because the people couldn't get over that next hump. Or you've got an amazing inventor who doesn't realize they should not be CEO.
Yeah.
And those are tough conversations. But so those are standard, right? And then you've got to look at all the other pieces. And software is a tricky one, right? Because, when you have the hardware, it works or it doesn't, and you can actually see it and feel it and touch it and see the connectivity, right? Like, does this actually work? In software, it's funny. I love software though, and I'm a SaaS investor, but there's a lot of promises, right, of what they can do. And you have to believe that. And so it's funny because there's a lot of fluff in all of these CEOs when they're pitching you. But, it's kind of funny because I feel that there's just a lot of gray in software when in hardware, it's just like, it's black or white. It works or it doesn't, and that's it. So it's a different kind of diligence.
You mentioned an important point. It's that there's going to be fluff when you're having a presentation. So part of the skill is kind of getting your BS detector out and cutting away what you think is real. And it reminded me of a meeting I had. I think it was around 2008, I want to say. There were these two people, and essentially they were pitching the cure to MS. Like that was what it was. And we're a pretty small investment fund. And I was with a colleague of mine who had a background in biomedical engineering. And it was after that, we're like, if they really have the cure to MS, they wouldn't be talking to us. And what if we just passed on curing MS? So, I mean, I think our conclusion was they're full of it. Like, if this is the cure, they're decades away, and like that's just like too big of a whopper. What pitches or business models have you been presented with, Katherine, where you're just like, what the hell?
Well, people who are relying on maybe some slight celebrity. So I've had a lot of that associated. Okay. And you're like, so what?
There are only so many Kardashians, people. They can't endorse everything. So go ahead.
Exactly. And that doesn't mean, so that actually, the smarter celebrities are now investing. See, before they just would do promotional stuff, which didn't mean anything. Like, who cares? They were paid puppet, Right. But if people are, the smarter ones are investing now, but that kind of stuff, or a lot of hand waving. Or if you're in biotech, if you have no affiliation with a university, a national lab, then what? Like that's it's very expensive, biotech. So it makes sense that you get grants and a lot of that through some kind of connection. And so if you're not associated with any of that, then it's a little bit like suspicious, and so that's where I always want to look at that kind of stuff. But I mean, believe me, I've seen a lot of hand waving and trying to be distracting. You're like, wait, what about this? What about that? Yeah. And, you get to a point where you're so used to also, on the flip side, defending an investment that you end up asking a lot of questions and poking holes in it. And so pretty quickly you can see there's a lot of smoke and mirrors in some cases. And that's when you're just like, no, this isn't going to go anywhere.
Yeah. What about the one or the ones that got away? Do you have any tales of, I almost invested in Microsoft, in 89 or something like that?
Well, there's a lot of those, especially when it comes to social media. So social media is tricky because it's massive, right? I don't even think the people who founded these companies knew the extent it would invade our lives, right? But also a lot of people are like, that's just, that's not really going to take off or go anywhere. So I think a lot of people missed out on social media investments because they just didn't realize the power that they had. So, there were a lot of family offices I know who were just not that interested in social media as a theme. And now I'm sure they, are worried that they missed out. But as you can also see, the things go in and out. Facebook was a leader, and then people were like, oh, Snapchat. And now it's like, oh, they're not happy with that. And there's all these others. Donald Trump started his own, right? So, there's so many now that, to keep up with, it's incredible. But the first leaders of that did really, really well.
Yeah, I remember hearing about Twitter, and it's like, oh, people write stuff in like under 100 characters. It's like, who would want to do that? Who cares? So it shows sometimes, like, one, we never know, but a seemingly lame idea executed well can be $1 billion+ proposition.
Exactly.
Speaking of $1 billion+, you've worked for some billionaires, and I'd like to be one someday. Not for you to. Yeah. What are some, other than just being born into the right family? Any things you've gleaned from working with these kind of people?
It's great question. So what I've seen, and there are other people, who've done research on this that I've read about, that a lot of them are entrepreneurs. So, it's not always that the first generation makes an exit. It could have been like your great grandmother or grandfather started a business and you ended up inheriting it, built it up. And so that does happen. There are errors, but a lot of entrepreneurs, when you have an exit, that can be an incredible opportunity, because you might get a lump sum, or you could get stock options over time, but still, those are where you can really, that's where I've seen immense wealth being created in a generation. And so it's not that you can't get there as an investor, because there certainly are a lot. Now in Wall Street, I saw that. In Silicon Valley, you see that, where people have an investment career and they launch and they're a partner, and so they get carried. And that is another way that can help create billionaires.
Right. And that's still another way of starting a business. In order to get carry, which is performance fees, you still have to start a business generally.
Correct.
And then,
Correct. I think leverage. Leverage goes both ways. It can be painful too. But if you have a lot of money already and you're able to leverage that by investments, that is also another way, which could be incredible. But then you look at some dangerous things when too much leverage is allowed, like that former hedge fund manager who's in New York, whose family office blew up. That was a matter of
Bernie Madoff. Are you doing?
No.
That sounds bad,
but it was recently in the press.
Oh, okay.
I won't name any names.
Fair enough.
But that's where leverage played a key. Leverage created an enormous wealth because you put in $1, but if you can lever it up to 10 and the investment you did well, that means you make 10 times that, right? But it also goes down the same way. So it can also really hit you and be a gut punch. But so I think entrepreneurialism is really the way.
So entrepreneurialism. So essentially, it kind of boils down to taking gambles or betting on yourself or some people you trust. I think that's important because for every billionaire that's out there, there's so many more trying to be. And one way to not get that is to never try, is to never take risks. But there are, like most of us, we're not billionaires, we're not millionaires. But we still want to build our savings. We still want our investments to do well. What tactics or approaches can you recommend for, the other 99%?
Well, the thing is, you have to, it's compounding over time. What's not fair is some people in life are given a heads up and maybe they have a job in their 20s where they actually open up a 401k, or maybe their parents even suggested before. Time is, I mean, listen, there are always wins you can make later in life, but it's the earlier you get in, the better. And luckily, I mean, I never had a job until recently that matched my 401k, and other people benefited from that. So maybe their
Yeah.
salary was less, but they got that. So there, I would say for the average person, um, research new technologies, but if you don't have time, it's best for you to go into funds like mutual funds, because there's somebody sitting there whose entire job all day long is to look at that stuff. If you like finance, then that's different.
Sure.
Getting into individual stocks and positions, or maybe even looking at blockchain and crypto and things like that. Luckily, also something happened recently where FINRA is allowing people who work in finance to be accredited investors. So, there are these random
I like
right?
that. Yeah.
So it was $200,000 as an individual, $300,000 as a couple per year that you had to make. And somehow that makes you sophisticated. Well, that doesn't, right? And then there are some people who are making less than that. Maybe they're making 150, but they work in finance. Well,
Sure.
Why can't they invest in some of these things? So that was interesting, which changed. But I think that you have to invest and use your network too, because I know that I have been able to get into deals because of my network that I wouldn't have known about otherwise. And also, there's a whole democratization of finance happening. And look at the intention. I mean, people are going to slam it, but the intention of Robinhood or something like that, or Acorns, where it's small investing or fractional shares or things like that. I mean, we never had that. It's like,
no. I mean, the whole idea of crowdfunding is pretty new. Right?
Yeah. And the fact that you can just open up an account and do that is amazing. You couldn't do that 10 years ago, 20 years ago. There was nothing like that. So that's fantastic. But you also need to, take it with a grain of salt and not dump all of your money, put all your eggs in one basket, like buy, just the Dogecoin or whatever, like you've got to have a variety. Some people just go all in on one thing, but you really shouldn't do that. And everybody knows that. Look at our markets; they're down today, but they're gonna, they'll rebound. They always do.
They always do. Just the matter is when. You've had another transition where now you're back in Maryland, but in biotech. How has that been? I mean, it seems like quite a different role from the consumer product focus you had with some of your old jobs.
The funny thing about due diligence and investing is that it's kind of the same structure. Yes, it can be different. Like today I invest in technology broadly, and I end up doing a lot of biotech, which I didn't in the past. But your process a lot of times is the same. And so, I originally invested in hedge funds and working with family offices. And then after the Bernie Madoff and the financial crisis, a lot of family offices wanted direct investments and trading secondaries. So I worked in around there. So I was not only working for a family office, I was working for a startup that they started, but I was also looking to trade with other family offices on their secondary positions. So, when you are in and around that, you get to know a lot of people, but you also have to do a lot of due diligence and defend what you're working on. And, those processes can be carried over to another job. And so now I'm still working, with family offices, but I'm also working with the state of Maryland on their portfolio, and which has a lot more biotech and their direct early stage venture investments. But, the process is the same. I have to write investment memos. I've had to do that now for 20 years. And some entities require more than others. But at the end of the day, a lot of the work is the same. And a lot of it comes down to, do you really know enough to defend this? And if things go south, what are you going to do? And so, a lot of that is actually the same. So an investments job, although the industry you might be investing in could be a lot different from job to job, but the process has a lot of similarities.
Very well said. You can look at different menus, but you still got to pick what you like and defend it. So what do you know now, Katherine, that you wish you knew when you started your career?
Oh my gosh, I remember early on in my career, one of my bosses said, there is no stupid question. Your job is to ask the questions. So if you don't understand, you keep asking, and it doesn't matter where the person went to school, and that was good because the power was with me to ask enough questions till I could understand and explain it, and then have to sit in an investment committee and defend it. So that was like, don't be shy back then when I was young. Now I don't care. I'm old. So I don't mind asking questions, or because there is no dumb question, or saying, I really don't understand business model. Actually, people want to talk about their companies. They want to tell you everything if they're, if they're genuine and not a front. So that was one thing, is like, there is no dumb question. But what a lot of people in finance do is that, like, you're like, okay, they just said a term I don't understand. Write down that term. And
it's always an acronym too. Yeah. How quickly can I go to Wikipedia?
It's like, what does that term mean again?
Yeah.
You're like, oh, so, I had a lot of those moments, but I guess, if your job is to do due diligence, then you can't leave a meeting with hanging questions. And, that's something that I learned that was really important.
Basically, get your questions answered. What advice do you have to people, who want to be the next Katherine Hill Ritchie, or they want to get into hedge funds and venture? Yeah.
Well, I would say this: investing is an amazing career, and there are different ways. You can do it in a family office. You can do it in a government entity. You can do it in these private funds. You could do it for, pensions. You can do public investing, private investing. I mean, investing is like enormous field, and we didn't even talk about like real assets or real estate. I mean, there's so much. So, and it's not boring at all. In fact, you can focus on retail and fashion. You can focus. I remember this one, I was with this, New York City, hanging out at some fancy cocktail event, and some stupid girl's like, finance, it's boring. I'm like, you're so wrung. My job is fascinating and awesome. And by the way, it's full of men. And they were like, oh, that's not why I went to finance. But anyway, I would say, there are so many paths in finance, and you need people who are accountants, but you need people who are good at marketing. You need people who are good at communicating. So it's not all nerds that are sitting there crunching numbers on an Excel spreadsheet. There's a whole, industry around it, and there's people with all different skill sets that make it run. So, you can be someone who is better at fundraising. And there's some people that are much better at just understanding the depth of their industry or crunching the numbers, or, so there is a place for everybody. And I think it's global and just very exciting. So I would say, you're going to learn a little bit in school, but working, you learn so much. And also, one of the best lines I ever heard was, when you go in an interview and you're young, you're trying to pitch yourself and prove yourself. The best thing you can say also is, I'm here to learn.
I'm here to learn. It's a great summary. You could finance. It's not just for nerds. Katherine Hill Ritchie. I'm going to put that on the tag for this show.
Exactly. It's true.
Very well said. Well, we're wrapping up, but I want to kind of close with this. What are you most optimistic about?
Okay, so this is a little bit different direction, but I am optimistic at the number of women running funds and getting more support and visibility, because women are really good money managers. That's a fact. There's data on that. And there are also women who are terrible at running funds, and there are men who are terrible at running funds, and there are men who are too risky too, but in general, the point is that more women are entering and proving themselves and getting money. And it matters, because I'll tell you why. Like when I started looking at biotech and things like that, and like specifically women's health, not to go on a rant about women, but frankly, there is a lot of areas that have been overlooked. And like, it's shocking that in this country, the death rate from women giving birth, and I mean, we're a first world nation, is on par with some third world nations. It's a bit shocking. there are women who are raising funds specifically focus on women's health. That's something that's important to me because I'm a woman, right? So I guess what I'm excited to see is that there is a democratization of finance, and we're way behind. And that's including, it's not just women, it's, your diverse founders, people of color who have been overlooked for a very long time. So I guess I'm excited and hopeful about that, and that there are just amazing people who have discovered incredible things in around stem cells, or if it's blockchain or whatever. And it's great because I get to be a part of that, even though I didn't create it myself. I can invest in it.
Well, you're a huge part of it. You've inspired me. And thank you so much for being on the program today. We really appreciate it.
Well, thank you. It's so great to reconnect. And from long ago, in my early days in New York, from days of hedge funds. So it's such a thrill to be here. Thank you.
Thank you for listening to this episode of the Matt Balaker podcast. To learn more, please check out mattbalaker.com and encourage your friends to like, subscribe, and share. Really appreciate it.